As a bit of background, I'm a financial journalist. I was previously, the reason I'm into finance was because I was an economist.
Yeah. Do you think your view on wealth has changed over the years and over the experiences around what you've seen and where you've been?
Yeah, I think I'm more cautious. I think that what you see other people doing is not necessarily right for you. Some people have a big appetite for risk, some people don't. And you have to take that into account, what's right for you and your circumstances. Sometimes you have to do things that would not be right for somebody else to do.
Hello and welcome to another episode of Ways to Wealth. Today I am joined by Lucia. Lucia, why don't you give us the too long didn't read about who you are and how you got to kind of be here on the podcast? Obviously, we reached out to you and we thought you
Well, as a bit of background, I'm a financial journalist. The reason I'm into finance was because I was an economist. I was an economist at the New Zealand Treasury, and then I went into journalism from there. I used to forecast inflation and operating surplus, and so I have my views on that. And then I got into finance, and I stuck with financial journalism. Clearly, I won a scholarship. I went to the UK, and the objective of that was to really discover what is wrong with financial news in New Zealand,
okay.
how you could improve financial journalism in New Zealand. And I have to say, I think it's got worse, not
I was
better.
about to ask about that. Okay.
And then from there, I went to England. Well, that's when I went to England, and I moved around a bit and various jobs and banks and things. And then I was there for about 18.5 years. I bought a house. I went to the Middle East, and I eventually ran a news service there in the Middle East. So even though it was in mergers and acquisitions, you
Yeah.
realize how important families are. But if
Right.
some families don't get on, they simply can't do business.
Right.
So
Okay.
it's all to do with families, and yeah,
Yeah.
that always.
Interesting.
And you can't do business with certain countries. At that time, we would call in the UAE, I would be calling Israel, but I couldn't actually, even though the number rang, I couldn't get
Right.
through. I
Okay.
couldn't speak to anybody in Israel. So Israel had to be done from the US,
Uh-huh.
which probably says everything about the relationship,
Right. Yeah, true.
which really
Um,
Arabs and yeah.
yeah.
And
That
then I came back to New Zealand, and I launched a few companies, and one of them was Learn Business English, and there was Behavioral Shift as well, both of which are growing. But I'm really concentrating at the moment on Learn Business English, which is part of Scriptus, and we have an online business English course. And
right.
really, we're focusing ultimately, firstly, on India and the
Okay.
Philippines. Yeah.
Okay. Cool. And you're running that with some other people? Are you like
Yeah, just a co-founder.
yeah,
What I did is that I worked in Vietnam, and I was teaching English.
yeah.
And that was when I had come back from the Middle East. I was in Queenstown. My mother had just died and all the rest of it. But I went to Vietnam, and I was teaching English. And I at that stage, a number of people said to me that English was good enough, but they wanted to be in business. And the Vietnamese are very into
Right.
entrepreneurialism, into business. So
Right.
I sort of mixed my learnings and that. I thought, oh, I have an
Ah.
online course. That's fine. That's better. So that's what happened.
Oh,
And
cool. So
then
your objective is basically to teach non-English speaking people to speak and do English better
yeah,
in
business
business.
English.
In
Yeah,
business.
exactly. So the aim is to really show people that they can work online. It's how to communicate, how to negotiate, marketing aspects of English, how dealing with in business can sometimes be, often it's very different to speaking English, and you have to have a reasonable level of English to do business English. We're not into teaching verbs and all the
Right.
grammar which you get in English,
Right.
but more about, a lot of it's more about business than English, but it's learning English in a business environment.
Yeah, okay. Yeah, interesting. So,
Yeah,
so you started your career off in the Treasury,
yeah.
as an economist.
As a macroeconomist, yeah.
Yes. And then obviously you subsequently go into journalism. But I guess that kind of tells us a little bit about you, um, saying that perhaps you like finance and business and numbers, but also you clearly, given your long career in journalism, you obviously would have loved the written word in English. So when you were going through study and you were thinking about what you wanted to do, like, did you have a clear sense of what you wanted to do, or?
No, I think when I assumed I wanted to be an economist, which does involve some writing, of course, as you do if you're working for government. But I took the view, rightly or wrongly, that you have to be the best to do well. And looking at what New Zealand has now, I don't think it's the best in terms of economists. But I took that view, so I went into journalism, so I could combine the two. But also, one of my first stints in New Zealand was working for the National Business Review,
Right. Oh, yeah.
and that taught me a lot about, even though it was a few weeks, only a few weeks, as an intern. Um, I had knew a lot about fishing quotas. And
Right.
I was told, oh, you can't do that. That's not right. But so there was a big difference between what I knew and what was out in the public domain.
Right. Okay.
There was a big difference. So that there, it was interesting in the Middle East where I worked on mergers and acquisitions.
Hmm.
And in the Middle East, much of the stuff that you get is not in the public domain.
Right.
It's
Yeah,
not
okay.
like it's not like New Zealand or America or Britain where you go to, they have people lodge what they're saying, they're publicly listed companies, so
Yeah, filings,
therefore
disclosures.
yeah, they don't have things like that. It's quite different.
Right.
So a lot of it, people would say things and they wouldn't, and then they'd say, oh, we didn't say that, but they did, and you have it recorded. But there was on one occasion, and it's quite interesting because there's one person who's now dealing with Donald Trump and very big in the UAE in the real estate business. I did a lot of real estate there.
Right.
A guy called Hassan Sejwani. He's the CEO of Damac, which was the largest privately listed company, real
Yep.
estate company in the Middle East.
Right.
Now, it was almost too big to fail. And all I knew is that it was about to fail and it was probably bailed out. But when I interviewed the CEO, he refused to be recorded in any way
Right.
because
Int-
they wanted to be able to say, no, we never said that.
Yeah, of course.
And so
Oh.
it's really quite interesting the difference between what you know and what you pick up and what is in the public domain, what people believe to be correct.
Right. In specific jurisdictions, I guess, because you've
Yeah, and
always.
different, like in the Middle East. But I learned about that in New Zealand too.
Mm. So
And
there
people,
can be siloed economies that have a very concentrated information stream, perhaps.
I think so. I mean, I was just talking to somebody just before, a colleague, in fact, who was saying that they had been finding out that there were in the US there are different tracks the billionaires can buy and sell stocks. So according to the Treasury, lets them know. So really, it's insider information.
Well, there's been a lot of criticism on politicians for trading and speculating, and that's been something that there have been platforms built even to copy trade politicians and famous investors because they report, as do the top fund managers. Any hedge fund manager or person owning over $100 million in assets has to file a 13F filing, which
Really?
means that every quarter you can actually get what investors are holding. Big investors, Warren Buffett, Stanley Druckenmiller, Ackman, Burry, all the top guys. And we actually track them on Acuity, by the way. So one of the things we do is we track all the investors that are filing. Um,
And they are prepared to file, but you only track what the numbers that they put
end
in.
end positions, so closing positions. So I don't think there's a query on whether or not the information is correct. The information will be correct. It's just that you don't see everything because you see snapshots. But what you're referring to as well around what you're sorry.
I just saying that's interesting.
Yeah,
Yeah,
it's super interesting because in theory, a lot of there's a lot of talk around how how well the best investors outperform even the index, for example, and how can they achieve that? And that's
exactly.
and that's typically achieved by them having an edge, and often that edge historically has always been an information advantage,
Yeah,
but also an execution advantage. So,
that's what the mortgage. That's what M&A. The what in fact it was a platform called and that's where I got into online merge market.
mm,
So it was owned at the time. It was owned by the Financial Times Group, and they sold that. But the group was sold to Nikkei,
mm,
so the Financial Times could concentrate on education.
okay,
But I think in the Middle East, a lot of them are their families.
yeah,
How do you know what they're doing? And we always used to say, whether it's true or not, the stock exchanges in Saudi Arabia, in Abu Dhabi, and Dubai, that they are virtually like casinos. They're like gambling because it's not a big market. If they want bigger, they would have to go to London or somewhere else. They'd have to, or
yeah.
New
I
York.
mean,
There's no
yeah,
depth in the market.
right, yeah, yeah. There's not potentially not that much liquidity.
No,
Um, uh,
I think that's what. Yeah, there isn't.
yeah, I mean, and you've kind of seen that. You've seen that actually, kind of one of the big benefits about the U.S. equity market is the depth of liquidity,
Yeah,
and that's been, their biggest and best export is actually their financial system. Obviously, they are the global reserve currency. They get to offload some of the cost of their debasement to everyone else, which is great, a great advantage. And of course, they have the biggest capital market with the most depth and the most liquid products, which means there's a great appeal to their market. Whereas
it'll
you get
be
something like,
interesting to see what happens if it were to happen that the US is no longer the reserve currency.
well, yes, yes, we can definitely jump into that. I'm keen to. And I guess with a less liquid market like Abu Dhabi or New Zealand, for example, there are less individual operators in the market because there are less nodes that can basically pass shares or pass information. Therefore, it creates ultimately less competition and a more superior information advantage potentially to certain market players.
Yeah, absolutely. It's but you keep going back to the information advantage, and that's what, as a journalist, I was sort of involved with, and that's in a way what Learn Business English is about, because it
Mm.
gives you an advantage being able to
Yeah, for
know
sure.
about business, and if you know
Totally.
once you can speak the language and you can speak the jargon of each industry, that gives you an advantage.
Yeah, for sure. Especially if you're trying to get employment or start a business,
Exactly.
that lingo will help you build
And
partnerships,
networking
relationships. Correct. Yeah, that
always.
makes total sense. Yeah, it's a
That's what.
lot of and also just the cues, you're going to learn also about kind of those subtle cues and cultural dynamics that exist as well, that are nuanced but make a difference, really. Um, so you're also talking about just to
Mm,
just to kind of tie a bow in the previous conversation, you also talked about basically retail can sell shares in a different way than a high net worth, or someone that's executing trades through a Morgan Stanley or a Goldman Sachs in the US, or some kind of direct market. And that's because free trading isn't actually free. If you ever have free trading, someone is making something from something. So if you've got a contract for difference website where you can speculate on different assets, there's a chance that that platform may actually be betting against you as a user, because that's how they make their money. Or they might be selling that order information to market makers, and that's how they may make their money if you are not paying trading fees. Um, and you're referring to the fact that they get to execute first, which means they get their shares directly cleared through the market, which means you're directly going on the market book, and you're saying, okay, I want to buy Tesla at $400. Whereas in a lot of in the reality is a lot of online platforms is you go and say, I want to buy Tesla for $400, and then some intermediary goes, oh, I'll take that off of you because I know that I can sell it again for $398. Okay, so let's now talk about the what you were talking about around kind of what would happen. You said when, and then you corrected yourself to say if, when the US is no longer the reserve currency. And I had an interesting episode of Macro Monday this week, which will unfortunately have been out quite a while, but it's on LinkedIn now, where we were discussing a little bit about this, but we can go into depth now. So I actually posed the question on the podcast. I said, "What It seems unusual that a government regime would be encouraging the debasement of their currency and the adoption of a new currency in the form of Bitcoin."
and Bitcoin.
Um, if you notice that Bassett came out over the weekend and said, well, the government's now been shut for X amount of days, but Bitcoin's never
34
shut down.
days or something.
But Bitcoin's never shut down. So, that creates a real, I guess, in a sense, a red flag, because you go, well, why? It is very unusual historically for a government to actually embrace a new currency, or try and basically debase their currency almost intentionally. Typically, what would happen in a high inflation environment that we're actually in is the governments would historically protect the currency and maybe even ban other currencies from being traded, even other metals, so gold, silver, things like that. Whereas in this environment, we're seeing almost the opposite. Have you
Yeah,
got
with your,
have you got any have you
yeah,
got
I
any
think,
Have you got any
well,
perspective on that, based on your history? Then obviously working in financial markets for so long in London, etc. And then, yeah, do you have a current view on that whole dynamic?
I think that there is a very big likelihood that all the countries, they will move away. They might move back to gold standard or whatever. And there's no doubt that crypto is, people are making money out of moving to crypto, whether it's the US president and his friends or whatever. We know that that's the reason. We have to be very careful about
Yes.
that, because that's probably it goes up and down a lot, put it that way, a lot of volatility. in the crypto markets. And I think
Well,
people
that
think,
comes
oh,
down to liquidity too, right?
exactly. And there's not that much liquidity in the markets.
Liquidity, there's no depth of liquidity compared to other markets. And also, it's unregulated from their derivatives markets, especially where you can have lots of pent up leverage built into the system, where eventually that it breaks and it creates liquidity events for all of those users that are speculating using derivatives. So I'm just reading the book 1929 at the moment. It's by the same author that did Too Big to Fail. It's a really good book.
Yeah, I think that's
Um,
what happens. You see
yeah,
that a lot in the Middle East.
right. And well, and I think, you know, it seems to me that if you don't employ leverage, it's pretty hard to lose in financial games.
Oh, they will all be leveraged,
No, of
and
course. But
and
it
that
seems
will
like every
help it
financial crisis stems from too much leverage.
absolutely. And we know that, to what extent to what extent do you want to be leveraged? And I know in the Middle East that when I went round to, the various parties, whether, Saudi Arabia and conferences, etc. I mean, Trump came back and he had said, oh, he's raised all this money. I've been to all the same conferences that he went to, all the same events. And I know that what they say and what they do are two different things.
Yeah,
They
right.
will say a certain amount and they won't. Look at Demac, for example. And it was as though, oh, we're going to do this golf course. Trump had already got golf courses and hotels in Dubai.
Mm,
None of
yeah.
that, So what he says, and you think, what? And people now are saying, oh, they're shooting there. There's problems in the Persian Gulf or Arabian Gulf, as you call it, in the Middle East. Largely, it's the Arabian Gulf. Um, why? Because it's always been the case. So none of it's new, but they're making a big point of it now. And I think that's the same with a lot of the financial markets. A lot of things have been going on for a long time, but they
Mm,
make a lot of noise about things
at
when they
certain
make a
times.
lot of money.
Right.
But I'd be a bit careful about all that.
What do you mean by that?
Well, I would just think that you have to be prepared to have a lot of volatility and a lot
So that's
of
really interesting. Yeah,
not
okay.
always a lot of upside. There's not always a won't. It's like the real estate in New Zealand. They're now talking about negative equity. And a few years ago, I had a cousin who said to me, "Oh, but property always goes up in New Zealand. You never negative equity." Well, of course, it might have done, but that doesn't mean. I mean, I was in the UK and it was negative equity,
Mm.
particularly in places like Croydon.
Mm-hmm.
So,
Uh-huh. Right. Yeah,
so
because that was up and coming at the time, right? So that was basically where there was a lot of growth.
yeah, maybe, but
Like it, as different like Brixton and stuff also became very popular in the mid-teens, 20 teens, started to
yeah, they
become
did.
more popular. So that kind of makes sense. So you talked about you know, I guess your kind of movements around the globe. Like it seems quite risky, seems quite adventurous. What gave you the idea to just be in environments that are also kind of seemingly feeling, probably for someone relatively westernized, um, like quite intimidating, potentially unsafe, a lot of culture shock perhaps?
I think there is for a long time, but I think there are things you have to work through. I
Mm.
mean, once you work through them, you might as well enjoy it,
Hmm.
And I don't think it's easy. I think a lot of people give up way too easily in, well, it's a different culture. It takes time to,
Hmm.
and in different places, it takes time to settle in. It's
Yeah.
not yet. And I think people want it to happen, you know, want things to happen straight away. A friend of mine, came back from Dubai after 2 months taking a job and said, I was only intending to go for a short time. You don't go through recruitment companies for a short time. That just doesn't happen like that. But
Yeah.
after 2 months, because suddenly she decided that's not what she wanted. 2 months is not enough to know.
Yeah.
That's so, and it gets easier. It just, lots of people say to me, oh, I lived in these environments that were difficult for women, difficult for Westerners. But I think you get used to it. You just have
Mm.
to just deal with what is happening.
Yeah. Do you think your view on wealth has changed over the years and over the experiences around what you've seen and where you've been?
Yeah, think I'm more cautious. I
Okay.
think that what you see other people doing is not necessarily right for you.
Hmm.
And some people have a big appetite for risk, some people don't,
Hmm.
and you have to take that into account, what's right for you and your circumstances. What you know Sometimes you have to do things that is would not be right for somebody else to do.
Mm. Yeah, okay. And but like I guess also holistically and kind of like does it, you know, do you think that the way people are starting to prepare themselves and hold their wealth, do you think that's changing? Do you think the
Yeah,
view around that's
I
changing?
think people need to. You mean in New Zealand or
Well, I think New
everywhere?
Zealand, it's very clear that that's happening.
I think, and it's probably about time,
And it's
in a way.
probably and it's definitely needed.
Yeah.
Um, and I think that it seems like actually it's going to probably take some time to actually get rid of the hangover.
Yeah, I think that many people are not focused. They are focused on wealth and they think that it's going to be easy. But I think, and increasingly, more people are generating wealth um, from
Their
their
own IP.
occupations.
Yeah,
Yeah,
their own
and
IP.
yeah, rather than from investing in property and flipping it, which was the case before. I think, yeah, people are now realizing they have to invest in themselves and that might be the way forward. I hope that people then learn that you have to take time to look after yourself and to find things that you like and make a mark,
On the world,
yeah, on the world. And
on your
whether it's,
influence.
yeah, exactly, if that's what you want, that it's not as easy. I think there's a lot of people that thought they could make a lot of money, like from the internet, for example, like influencers and the rest of it. But that takes time. None of it's quick. And
Yeah,
people realizing that all this takes time.
I think that's the big lesson that people can learn is that anything good takes 10 years.
Oh,
Um, and I think that I guess that's kind of the disconnect between what we see online, or what we saw or what we thought we knew about property. Like, oh, all you have to do is a property development and subdivide, and then you make money.
yeah. Yeah,
Because if I turn this big box into a bunch of small boxes, then I get an arbitrage,
exactly.
essentially.
Mm.
Um, but obviously, you're dealing with um, atoms, so there's this whole kind of concept of just things can go wrong. You can get planning go wrong. You can have issues with the council. There's a lot of risk associated with property that people don't really associate with risk because they say, oh well, the price didn't go down. But actually, that's because it's not very easy for everyone in New Zealand to just go to a liquid market and sell their property. You know,
Oh, it's a
it's
liquid
it's
asset.
it's what we call, and what's becoming more popular in the business is called as basically volatility arbitrage. So a property fund or a venture fund might look like it has better returns and lower volatility because it's not priced every day. And the only reason the volatility is different is most likely because there is no price. So you didn't mark your book correctly. Whereas obviously when you go to the you go to the liquid public markets and you go buy a bond, you're getting the price that the market has set, and you're getting quoted every single day. And actually what that tells you is that in auction-based systems where you have buyers and sellers, people that are giving a bid and people that are giving an ask, that sometimes there are much less buyers or much more or much less sellers, and that's where you get obviously price move, and that's where you can get prices that aren't necessarily real. It might just be that there's no one in the market to buy.
Well, at the moment, that there isn't anybody to buy on some of those things. There
On
is
the
some
property.
on property,
Oh, for
and
sure.
and also, dare I say it, for selling shares. If people do not have the cash, you can't buy, whether they are on the public domain or they're sold privately.
Yeah, I think that, yeah, that talk, well, it depends what public market you're thinking about, but I mean, if we were to take the US as an example right now, just because it's the most liquid and where most people actually, most individual own shares, um, it will be interesting to see, obviously, if there's volatility and there's price decreasing, if that, and that always does adjust investor behavior. At the moment, we are having some of the best and least volatile, in some respects, public markets than we've had in a long time. Just until recently, it was just a elevator up for gold, Bitcoin, and the equity market. Obviously,
Oh,
now
yeah.
we've now seen some divergence there and some breaking of the correlations between the three, and we're obviously seeing other things happen. Um, so it's quite interesting. I think the main thing, though, that I think we could talk about is that actually, and maybe even kind of as we start to close in, is if you have a lot of leverage and you have volatility, it means that the price could be extreme. The price movements could be extreme. And when you employ leverage, you you have the chance of being forced to do something by the person that you owe money to, essentially. So I think the story seems to always be leverage is the cause of most issues. Like, even if you think property investor, there's no property investor that's fully invested without debt that cares right now. If you have no debt and you own properties and you're getting a yield from those properties, you don't care.
It doesn't matter.
Doesn't matter. But if you
You
have
can
a
keep
bunch of
holding
debt,
it.
yeah. But if you have a bunch of debt, that's the issue. Same with margin loans on stocks, and it was the same in the 1929s. It was the same in the 2000s. It was the same in 2008. And it was the same in 2021, 2022, when people employed a lot of leverage and speculated. And now it's very similar now with the AI trade and the crypto trades that are going on, where there's a lot of there's the duality between genuine adoption
Mhm.
and speculation.
Mhm.
And essentially, if you don't use leverage and you have a long-term view, it seems like those investors do best.
Well, that's what investment is about, is taking a long view. It's not about making money on the short term.
Mm.
And I think people have got used to the fact that you can do everything very quickly, whether it's shorting or whatever.
Mm.
You can, and you can't. Ultimately, everybody is better off if they can hold
And do nothing.
for the long term and do nothing. So then there's a calls into question what is too much leverage.
Yeah. I mean, that's a hard one, right? Like, because I've
That's
always
really
taken the view of of not employing leverage at all. Um, I mean, Buffett and Munger basically said that they probably should have used a little bit more
hard.
leverage,
Hmm.
and they would have had much better returns. But they didn't. They chose not to. So yeah, I think there's obviously an amount of leverage that can give you an opportunity to stay relatively safe. but I think that comes down to the individual's willingness to have to deal with the consequences of leverage. And obviously, even if there's the slimmest chance you might not be like, like as soon as you employ any leverage, it creates that tail risk.
Mm-hmm.
So, yeah, I guess that's it's an interesting one. I think that you want to use the maximum amount of leverage when no one can, and ironically, the market has a way of making it so you can't.
Mm.
That whole typical buy buy when there's blood on the streets, etc. Right? The whole concept.
That's given me an idea. I forgot. I've just written an investment and economics module, and I forgot to include leverage. So
Right.
I better include leverage. The
I
importance of
think
leverage.
I
Yeah,
think leverage, should be absolutely included, right? Like, because
yeah, absolutely, it
it's
should.
basically the primary thing that gets anyone in any sort of trouble in any single thing. Take government, personal, business, all of it is always comes back to the same
Well,
thing.
look at the government now and the amount of debt. Look at America and the amount of debt. $31 trillion.
No, I think it's 34 now.
Is it 34? Yeah, something like that. It's like there's too much. And how much interest are they paying? When will the tipping point come?
Yeah, for sure. So, well, it will come. Well, I think the tipping point has actually already probably taken place, um, most likely, because there isn't the demand to change the behavior. You would need you'd need a real moment to actually get that to take place. So, moving on then, if you were, would you do if you were starting your career now and you were sat as an economist in the Treasury, do you think you would do anything different in this
Probably
day and
not.
age?
No, probably not. I'm
You would just
pleased
take
I left Treasury. I'm pleased I'm pleased I had that background and learned that. Then I went into journalism and financial journalism, and I could ask questions that, well, were perhaps probing in a different way than some people
hmm,
because I had different insights.
hmm. And do you
And
think that yeah,
ultimately, dare I say it, is like a financial journalist will get paid more than a journalist
right,
because
yeah, of
it's a
course.
specialized area.
Yeah, that makes sense. And do you think the journalists will go more and more towards independent media ownership then? You were talking about vocation, people are earning more through vocation, like so or
I think
occupy
they will. Yeah. I think that, I mean, I do have a small media company, but I can't go to America, for example,
right,
because I've lived too long in the Middle East. And most people who've lived in the Middle East understand the Palestine-Israel issue better, and therefore I couldn't go to America.
right,
I'm a persona non grata.
right.
Um, and I think that, and that's my brand, and that's something you have to decide whether that's something that you want. People have to probably come out. Journalists will probably, you see that on Substack, as the media companies are becoming more concentrated.
Mm, yeah,
There are different
yeah.
avenues um, that people will look more. They want to express themselves more, so they will write independently. They will
Do you
write.
think you would have written independently if you would have been starting your career now, do you reckon?
No, I think I was probably lucky. I would want something that okay, I'm doing business English and I've done older, I
Mm,
deal with older people as well, but
right,
I think as a journalist I would probably I would say specialize in something. Make sure you're specialized, and
right,
don't go with fashion, and
right.
don't do something really big like politics or economics. At least with me, I mean, I had to get into politics and economics just because it was finance. And I think that's what people don't realize, that you can get into finance and you can do other things too.
Yeah.
that everything else, the geopolitics impacts
Right.
finance
Yeah, of
and
course. Yeah.
your ability to make wealth. And I think that people think you can make wealth despite geopolitics, but in fact, it all matters.
Right.
And I
Totally.
think that's what you're taught, and that's in a way what you're doing as well.
Mm,
You're taking into account everything that happens on the national stage. How does that affect you personally? That's what matters
mm, mm. Cool. Well,
ultimately.
well, thank you so much for coming on the pod. I really appreciate it.
Okay, thank you.
And
Thank you for
yeah,
your insights and for your thoughts.
yeah,
I'll keep a lookout for what's happening now.
yeah. Likewise. So we'll we'll do the editing and we'll let you know when it comes up, and then yeah, hopefully we can have you on again when you've launched into India with your
Well, we've launched now.
Okay, you're in.
Yeah,
Nice.
yeah, and this is just the first quarter. We've got the next year. And everybody, well, the way we aim for the universities rather than the students, because then you can get the roll on. The students register, and then the next year, it's
Nice.
just an ongoing situation.
Awesome. Wicked.
Okay.
Well, thank you so much.